All right. Hey, everybody. Thanks for watching the Trading Ticker Talk today. It's good to have you. My name is Jeff Gibby. We're going to go ahead and kind of just do a little bit of a session with Jeff Tompkins. We're going to talk to him a little bit about, hey, Saki, good to see you. The His experience that he's had in the industry and trading in general. So I want to say thank you. If you're watching this on YouTube, make sure to like and subscribe. It helps a great deal. And if you're interested in joining the community that we're starting out, come to thetradersforum.com, www.thetradersforum.com. And we have a lot of really good lessons up there. It's a good community environment. Some really, really cool people are there. Anyway, come and check us out. Our guest today is Jeff Tompkins. Jeff, thanks for joining us. And I will have a few things to say about you, and then I'm going to have you talk a little bit about how you got into trading. But I want to say, every time I introduce Jeff, I say, hey, Jeff is one of the presenters that has one of the best first names I've ever seen. The second thing is, I love Jeff and the way he actually just talks about the market. So he's very, very, I love it when people explain some stuff to me and I don't go, huh? Or I don't question what they're saying. I kind of intuitively understand it. Jeff does a really, really good job of kind of talking about that. And he's been a partner. What has it been, like 6-7 years that you've been a partner with?
I'm terrible with timelines like that. I would say, geez, 6 years probably.
Yeah. During that time, hello, Diana. It's good to see you. If you guys have questions at any time, feel free to chime in. That kind of stuff. During the time I've known Jeff, when I met Jeff, he was very, very big on a site called Udemy.com. He did a lot of training in terms of teaching people how to trade. In the time that I've known him, he's really, really mushroomed up. He's running a fund right now. He does a lot of hedge fund management and just a great technician. Is how I'm going to introduce you. So is there anything that I missed? I did get the good name part, the introduction.
Yeah,
I think I hit the bases.
That was the most important part.
Yeah, so I'm kind of curious because we have a different story every time we ask this, but like, how did you get into trading initially? You're up in Boise, Idaho.
I am. Yeah. Good question. So I started back in the late 90s. I guess if I had to really go back, I took this summer school class like back in, when was it? It would have been probably the early 90s, and it was a finance class. I've always been interested in finance, but there was we got to, like, of course back then we didn't have all the fancy online financial resources, charting, all that kind of stuff. So people still use the Wall Street Journal, to get their quotes. That people use the newspapers, and so one of the parts of this class was they would hand out the Wall Street Journal, and we were instructed to select stocks out of the quote list and build a portfolio. So just a paper portfolio. And so throughout the course of the summer school class, we were then tasked with tracking how the portfolio did. I think that's where I kind of got hooked, where, it's kind of like Christmas morning each day. You get to like get the paper and look up the quote and see how your stock did. So I think that's really where I got caught the trading bug and got interested. At that point, I didn't have any risk capital where I could actually go trade for myself. So that came a little bit later, but that's kind of what caught my interest, and then ended up studying finance in college, and did a lot of that kind of stuff in courses that I took in college, and then decided, as I saved up some money and had some risk capital that I could invest into the market, I started to do that.
Cool.
And then I later got into options. We can get into, I'm sure, all of that, but then went from stocks to options, and then I've kind of branched out into pretty much all markets, futures and different asset classes. So
you're not going to believe this, but I forgot something very important. Hold on just a second. Hold your thought.
Okay.
Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins, and is not a recommendation or to buy or sell any securities, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading securities. Metastock, the Traders Forum LLC, and their employees and their guests disclaim all liability for any investment decisions by investors based on the use of the software, any trading strategies, or any information provided in connection with companies. Metastock Traders Forum and their companies do not endorse the purchase of a security, nor are they paid for the promotion of any security. No information contained in this presentation should be construed as investment advice or the solicitation to buy a security. So there you go. Let me go ahead and come over here. We'll just kind of look at a chart while we kind of talk a little bit. Did you realize that I had forgot a legal disclaimer? My lawyers will be happier now. So in any case, so you initially started trading stock. Do you remember what the first stock that you bought is?
I do.
Western
Digital. Western Digital
okay.
Corporation. WDC.
Yeah. Okay.
Yeah. Cool. It was the first one. I went to school down in Silicon Valley, so I was kind of taking interest in all the tech stocks down in that area. So I had a little familiarity with the company, and it seemed like a good one. And I actually even remember roughly the price it was trading when I bought it, which was I think a little over $4 a share. And of course I didn't hold on to. I don't still hold the stock. That also is where I caught the trading bug. I made money on the stock, so I sold it not too long after, but not at much higher of a price. Of course, it's gone way beyond that. But that was the first stock I bought. Was Western Digital.
Cool. Mine was Taser. But what do you? What do you? Do you have any particular memories of a stock that you bought that maybe taught you a particular lesson, or is there any trading stories that you have around purchasing a security that are particularly memorable for you?
Oh, I've learned a lot of lessons.
The market's a great teacher, isn't it?
It is. It's not. It can be a cruel teacher, but it is a good teacher. Not necessarily that jumps out. I mean, I've had a lot of, experience buying stocks where you think based on fundamentals or seasonality or, completely rational basis for this stock, doing well, moving forward, where it just completely didn't. So I have a lot of, I would say, examples where things didn't go the way they, rationally should have. And that's where I got more focused on technical analysis. So the stock market is obviously very complex. There's a lot of variables that cause stock movement. But ultimately, I realized this is really supply and demand. You can have a company with very good fundamentals that, where the stock doesn't actually do well. And everything is so interconnected. Buying one stock can, the impact on the price movement of that stock is so heavily impacted by all the other stocks in that industry or sector, the index that it trades in. So it's kind of like, a rising tide raises all ships, or it could sink all ships, right? So that's kind of the thing that led me more into technical analysis and focusing on that realization. So
that's really that actually kind of leads to a question I have. Actually, so I'm kind of curious, and this can be really quick, just to kind of give us an idea. But I'm just going to ask you: do you use any of this in your current decision making? And you can just say yes or no. Sector analysis.
Yes.
Okay. Fundamentals.
I do. Yeah.
News and research. Okay. Earnings. Do earnings affect if you buy a security or wait until after earnings, for example?
Absolutely. Yeah,
Okay, cool.
absolutely.
Before that was the end of my list. Before I had asked, before you kind of talked a little bit about kind of like your stock experience, and then you say you trade options. Would you say that most of your trading is trading in options right now, or is it mostly stocks, or is it a blend?
Yeah, it's heavily weighted towards options. And right now I don't even own any equities in my other than in retirement accounts and things. But yeah, my active trading is almost all in options, options and
Okay,
futures.
cool. When you're looking at an option, do you have different preferences for like the expiration, the deltas? Like, are there certain things that you like to look at when you're trading options?
Yeah, so as far as expiration cycles and strike prices and things, it's heavily dependent on the strategy. Um, so, and this is something when I first started trading options, I didn't do a good job doing, or just didn't have the knowledge that it was important. Um, and that is that, when you structure an option trade or within like a specific strategy, um, it needs to be done in the context of the current market environment. For instance, implied volatility. So implied volatility is, of course, a major component of how options are priced, and 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 so whether you're selling high implied volatility, buying low implied volatility, or um, uh, you know trying to take advantage of theta decay or time decay, things like that, I really focus on tailoring to the type of the trade. So whether it's like a vertical debit spread, or um, a single leg short uh, uh, option position, tailoring that to the market environment. And so that's really what I focus on, because in the past I had one kind of style, and I would use one expiration. So for instance, I might go out 30 days in expiration, and I did the same thing for all of my trades, and that's something that for me changed a lot, and also led to more consistency and success in option trading.
All right, cool. Let me ask you a little bit about the hedge fund. Is the fund that you're running right now, is it something that's accepting new capital?
Yep, yeah, we are accepting new
Okay.
capital. Yep.
How if somebody's interested in kind of finding more about that, is there a link we can give them?
Sure. So the link to our fund is Altos Fund. Let's see, we have a couple sites. Let me give you the right one, because this is the site where if there's an interested investor, you can go, and there's a contact form where you can set up an interview. So we'll kind of run through the strategies with you, um, the fee structures, the past performance, those types of things. And that is altosfund.org.
Altosfund.org.
Yeah, altosfund.org.
Okay.
Gives you just some basic information, and then anybody interested in the fund can contact us, and we set up you actually get a meeting directly with me, and I'll run through performance and what we do within the fund and all that kind of stuff.
Now, what kind of led you to wanting to start up a fund?
So good question. I think it was largely customer demand. So about 9 years ago, I launched Alto's Trading, which is the publishing side of our company. So we do trading and investing courses, newsletter services, software indicators, and we rapidly grew this member base that just loved our strategies, loved the results. But there were a lot of people that it takes a lot of work, and a lot of people are interested in the markets, like to trade, but maybe don't have the time or the desire to put in all the heavy lifting, to be successful. So I started to get a lot of requests to trade. People were coming to me and saying, "Will you trade my capital for me?" And I'm not a personal financial advisor, so I would have to turn them down. And then ultimately I thought, well, why not start a fund where I can accept investor capital and trade it for the people that, had requested that I do that. So that's how it got started.
Cool. Is there anything that you kind of didn't expect that you learned in the process of starting a fund?
I would say there are probably a few little things here and there, but it was mostly what I expected, and I've been very happy, running a fund and managing the investments and trades within the fund. It's not a whole lot different than what I do in my own trading, and so I don't think, we have a fund manager and a securities attorney and auditor and all, that do all the grunt work. Really, all I do is trade the fund, and so I wouldn't say there was anything major that I, expected or didn't expect. But other than the hedge fund world is very challenging. There's misconceptions about hedge funds. There's just lack of knowledge about hedge funds. So I guess if I had to pick one thing, there's a lot of education, especially if the client hasn't been involved in a hedge fund in the past, to go through with the prospective client, and really educate them before they invest in the fund, so they kind of understand how things work. And so a lot of the investors we have in the fund had never been in a hedge fund before, and were, I think, pleasantly surprised to hear a lot of the benefits to a hedge fund that they weren't aware of previously.
Sure. I'm going to come back to that in a second because I'm curious. But out of the people that you kind of now, when you're talking to people and educating people about the benefits, is that something that you personally do, or is it something that your support team does, or is it a bit of a combination of both?
Yeah, it's a combination, but it's definitely something that I do when I do my first introductory call with a prospective client. So that's something I really focus on and make sure they understand, the risks and the benefits. And because a lot of clients are looking at other investment options, like just the typical family office, financial advisor. And a lot of the clients we have in Alos Capital came from that world. So they were, they had a financial advisor and just weren't happy with the performance, and then felt vulnerable because most of those investment portfolios are long portfolios. So they do well when the market's doing well, but then when the market, we're in a bear market or there's a market crash, they suffer. And so I think that's a big part of why people come to Alos Capital, is they want to have that opportunity consistency to not be so vulnerable to bear markets or market crashes and be able to make money in both directions. And so that's just one of the limitations that you'll typically find with, your standard financial advisor who just probably is buying S&P 500 products like the SPY and leaving the client vulnerable to bear markets and market crashes. So
what percentage of the people do you think that you come across, just from a guess, obviously we don't need to get too scientific about it, but I'm just curious, how many people are more interested in kind of directing their own funds or versus investing in the hedge fund? Because you have a lot of other tools and softwares that are kind of more, including the trade trend that we're looking at, that are more geared towards kind of an active trader.
Right.
What percentage are hey, I want to run it myself. It's my money. I feel comfortable doing that versus, hey, I'm going to let a professional handle it. What
Yeah,
breakdown?
I think that's a good question. And interestingly, there's a lot of probably a high percentage of investors in Altos Capital still trade for themselves. They still do their own trades. So there's definitely overlap there. I would say, I mean, we have a huge number of people who do trade for themselves and prefer to do it that way. So I would say actually it's a smaller percentage that just want to have their funds traded for them within the hedge fund and don't want to do anything themselves. Probably less than 10%.
Cool. Less than 10%. Okay. Do you feel like the trading that you do for your own personal account is different than the trading that you do for your hedge fund? And if so, how so?
Yeah, good question. So I don't replicate identical trades between my own personal account and the hedge fund, mainly because there's, hedge funds are heavily regulated and there's a degree of risk there where there could, be a claim of front running or pumping something up that I already own, like a stock. So I avoid that. But as far as the strategies, the tools, and everything that I use to make trading decisions in the hedge fund, those are the same as my own account.
Okay. Would you, for me, I would think like if I was running a fund, I would be as risk averse as possible. Do you find that you're willing to take more risk in your personal account? Because I wouldn't want to be in charge of losing somebody's money, right?
Right.
And do you find that you are willing to take more risk in your own personal account than you would in a hedge fund, or is it about the same?
Yeah. So I guess if I had to go back to your previous question, I would change that answer a little bit because that is one of the things that maybe I didn't expect it, or didn't have the foresight to think about that part of it because I'm very risk averse. And that's typically not conducive to hedge funds. Hedge funds tend to take on more risk. And I have that kind of fear and hesitation of losing somebody's money or not doing well for them. That because then of course you're accountable to the client. In my own account, I'm just accountable to myself. I don't think I wouldn't say that I take on more risk or less risk between the two. I try to treat everything as I would, my own money, and that is typically risk averse. And if anything, I'm probably too conservative. But
Same.
yeah, that's
Same.
yeah, that's a really good point. Good question, and definitely a challenge. Obviously, because I have family and friends in my fund, so people that I actually know personally.
You don't want to have that conversation over Thanksgiving.
Right, exactly. So yeah, no, I do everything as I would do for myself, and really avoid taking on excess risk or unnecessary risk.
Do you have when you're in a position, do you have a specific stop loss strategy?
Well, so a lot of as far as my trading style, and often people are kind of surprised because I don't necessarily use stop losses, especially with options. But that doesn't mean I don't have defined risk. So I'm very, focused on risk management and defining risk. But there's other ways to do that, especially with options. So I'm more of a.
Yeah, go ahead.
Go ahead. Yeah.
I was gonna say, so do you do that more by position sizing and kind of where you pick your deltas at and that kind of stuff? Is that what you're more focused on?
Okay. Right. Yeah, those are some of the things. Yeah, I'm just, and we do this at Altos, at our Altos Trading, our publishing side, focusing a lot on trade management and risk management within that, adjusting trades. So we do a lot of education on, structuring trades in a way that when something doesn't go as planned, you can make an adjustment to it. So that's really how rather than just use a hard stop loss, how we do that.
Okay. If you're talking to somebody that's kind of wants to be a self-directed trader, but they're just getting into the market, I like this question. I like to hear the answers to this question too. But if you're talking to somebody that's brand new in the market and they're just getting started and they're like, hey, what's the first thing that you would tell? What's the biggest rule that you say that you should always follow when you're trading?
Well, I guess first I would say, find a mentor or somebody that's been in the markets for a long time that can help guide you, because there's a very steep learning curve. I mean, for me, it took over a decade before I really felt like I had a good footing in the markets. Always practice paper trade before risking any real money.
That's a good one. Yeah.
Yeah. And then the last one really comes from, what we commonly observe with our Altos trading members. There's always this tendency to find, the holy grail, to find the best system. And I'm guilty of this. I did this many times early in my trading career, is jumping around, because there's no perfect strategy. There's no perfect indicator, no perfect system. And so when inevitably something doesn't go as planned, there's the tendency to jump to the next thing, when the one that you left may have been perfectly good and you may have done very well with it over the long run. So I totally understand the temptation, to jump around. But I think it's really important to consider your approach, your strategy, your methodology. Is it sound? Does it make sense? And if it does, really stick with it and try to avoid kind of jumping around, because that really just adds to the length, because you're just getting to encounter that again, and it adds to the lengthy learning curve, that we all experience starting out.
Okay, very cool. Let's see. We've had a little bit. Let's talk a little bit more about the markets. Right now, we've had a little bit of a bullish run. you could argue the Dow being where it is in the S&P 500. Do you believe that's because we're in an election year?
Well, I think mostly this incredible bull run that we've had is largely driven by AI. Of course, most of us know Nvidia is kind of the leader in this AI craze, and it's an enormous market cap. So when Nvidia was, on this incredible run, you can see there on the chart, it was, it was the rising tide raising all ships. It was just bringing everything up with it. So I think, yeah, certainly the election, being an election year has an impact as well. But as far as what we've experienced up until this point, I think it's largely, if I had to point to one single thing, it's Nvidia.
Okay. Yeah, that's obviously been a monster. Like, I don't know if it's still the biggest global market cap, but it certainly was kind of going back and forth between that and what was it, Apple or Microsoft this year? So
yeah. Interestingly, we're seeing a lot of sector rotation. So obviously, tech over the last couple of days has gotten pummeled. I'm looking at my other screen here pretty badly, and that's just rotation out of these stocks. So a lot of these big AI stocks, Nvidia, or the Magnificent Seven, Tesla, Meta. So we're just really seeing rotation out of those tech stocks, which is really driving this current sell-off. But we're not necessarily seeing money coming out of the market overall. It's just being sector rotation.
Yeah. Do you think there's some more promising sectors right now? Like what sectors do you see that you like right now? And obviously, let's put a disclaimer out there. This can change. You want to keep an eye on it. We're not making recommendations. But if you're looking at sectors, what do you think will be the strongest sectors over the next, let's say, then?
Well, I guess what I would say is when you get sector rotation, you want to look at it in the context of, the macro environment. So obviously we're in a high interest rate environment. There's a lot of anticipation about Fed cutting rates this year. But typically when you start to get any sort of fear or uncertainty in the market, if you want to be in the market, generally like your kind of safe haven is like your utility stocks. So if the market gets wobbly or we start to go into a sell-off, there's still sectors that do well. And typically that's going to be like your utilities, your sectors that aren't really necessarily directly tied to, again, that market catalyst or environment, which in this case is a high interest rate environment and anticipation of Fed rate cuts and those kind of things. So I think that's where ultimately, because this bull run has got to come to an end at some point, and there's going to be a significant correction, and I think that could happen very soon. But that's, I think, where probably it makes sense sector-wise to go.
Yeah. What is the saying? Like the best time to buy is when there's blood in the streets. And then the best time to kind of start to get more conservative is when people are overly enthusiastic. I should look up that quote. But when you're looking at kind of when you're looking to say, okay, well, we're getting a little bit overbought, oversold, what are the things that you start to look for to say, okay, well, it might be time to start playing defense a little bit more than offense? What are the kind of the key things, the key indicators that you would say that exist that you'd see in terms of kind of, okay, well, it's time to batten down the hatches and kind of maybe get out of some of these positions?
Yeah, good question and relevant question, because I think we're in that situation now. Number one, anytime markets are at all-time highs, I'm always in that quote, like the quote you said. There's obviously the Warren Buffett quote: "Be fearful when others are greedy," and you tend to see more.
That's it. That's it.
Thanks. You tend to see more greed in markets when they're at all-time highs. So people, there's the whole psychology of, there's certainly a lot of people that didn't take part in a lot of this, and they're looking at it in hindsight and feeling like they missed out and don't want to miss out on any future run up in markets. So there's more of a tendency to jump in when markets are all-time highs. For me, I'm more of a contrarian. So like you said, Jeff, when markets are at these levels, I'm actually more conservative or more positioned to prepare for a rotation lower. So that's one thing. The other, like we talked about, sector rotation. So when you start seeing, when you look at what the actual catalysts or in this case, like an individual stock like Nvidia were that drove markets up, and you start to see a shift there, that should be something to note. You'll also typically see more, you'll see a change in market behavior. So when you might have this very long extended smooth uptrend, and then you'll start to see it not, it may not necessarily be an immediate. Usually when markets shift, they don't just do it immediately right then and there. They start to act differently. So they'll start to, we'll have some significant sell-off days like we had yesterday and today, and then it'll go back up, but it won't go back up to where it was. And then, so you start to see more erratic price behavior. That's often a warning.
Actually, I just thought of this because I remember one time we were doing something with John Bollinger, and one of the things that he said that kind of stuck in my memory was like, market trends start in a squeeze and they end in a bulge. So exactly what you're saying, they get a little bit, they get volatile and they get undecisive and that kind of stuff. Yeah.
That's just a better, more concise way to say it. Well, yeah, exactly. That's a great way to put it. Yeah. And then one other thing I look at closely is the advanced decline line. So, interestingly, and I checked it this morning before our session, but haven't just looked at it recently. It's starting to change. but I'll, for instance, like pull up the S&P 100 and look at the number of advancers versus decliners. And I believe yesterday, I mean, we had a really significant percentage sell-off in broader markets. And I mean, I can't remember exactly, but wherever the NASDAQ ended up down, it was like 2.75% yesterday. If you look at the advanced decliners, there are actually more stocks that went up than went down. So, I mean, that just demonstrates, you know, market cap weighted indexes and how some of these big names can influence the overall increase or decrease in markets. So what I look for is when we get a sell-off, because that will if you have more advancers than decliners, that'll typically indicate this is just a temporary pullback. Really, just to gauge like a sustained pullback or move up in markets, that those should align. So if you're getting market sell-offs, and it's really widespread and it's more likely to be sustained, you'll see a lot more decliners than advancers, and it'll be heavily, it'll be like a big disparity. So like out of the S&P 100, you're likely going to see like 90, 95 declining and only a few advancing. And when you see that and you see it on more than just one trading session, that's usually a good indicator.
A good tell. What do you on average, how long do you hold a position? When you buy a position, is it weeks? Is it months? Is it days? Is it the same day? What do you think?
Yeah, again, heavily dependent on just a lot of variables. I don't have, it'd be difficult to put a
Okay.
blanket on it. Some I do very short term. I mean, I'm not really, I wouldn't classify myself as a day trader, but I do trades that I enter and exit within a day or within a couple days. Some I hold for weeks or even months. With options, and this is something that when we kind of work through this with our members at Altos Trading, and as we're going through like the educational process, or they're receiving our trade alerts and kind of seeing how we set these up and then manage them, is we may build an option trade with an expiration, let's say 60 days out. And usually when somebody selects an expiration for an options trade, they're kind of either assuming or have the mentality that that's how long the trade is going to last.
Mm-hmm.
But I'll structure option trades that have very extended expirations, even months out, that I absolutely do not intend to hold that long for various reasons. One is, gamma risk. So like when you get closer to expiration, the trade behaves a lot differently than it would earlier in the expiration cycle. But I could set a trade up that has a expiration 2 months out and only really intend to hold it a week or two. So
cool.
Yeah.
A very important question. Is it as hot up there in Boise as it is down here in Salt Lake? We're over 100 every day.
Same here. Yeah. I just actually looked at the forecast this morning. They're saying like 100. We're back up to like 107, 108 by late this weekend or early next week. So yeah, brutal.
Okay. All right. So we already put the link out there for the Altos Trading. That was altosfund.org. You can also go to altostrading.com. Is that right?
Yep, altostrading.com. Okay. Yeah, that's our education. And again, we do trading courses, coaching, trade alert services, indicators. So we Metastock was our first partnership for our trade indicator. Yeah. So
yes. And that's what you're looking at right here. And if you are interested in that, you can either go to Altos or you can come to Metastock. Either way, we'd be happy to send you some more information on the indicators. Jeff and his staff are awesome too. Every time I have a question it's Craig, right? Craig does such a good job in answering those and getting back to me, and they're just so thorough. And I love that because customer service is always important for us too. So.
Absolutely. Yeah. And you guys do such a great job with customer service, and we strive to do that as well. So unfortunately, it's just hard to get out there these days, and that's important to us. Absolutely.
Cool. Yeah. Well, hold on to Craig. Don't let him go.
Exactly. Right.
I want to say thank you, Jeff, for coming in. I appreciate your time. Thank you for all the stuff you've done for us over the years. I appreciate it. altostrading.com if you want to learn more. altosfund.org if you want to learn more about kind of a managed fund environment. If you are watching this on YouTube, make sure to like and subscribe. It helps a great deal. And if you haven't yet, come to thetradersforum.com to see some more information about, or to join our community and kind of see what we're doing over here. We have an active chat, a lot of lessons. We do a lot of stuff, and it's a completely free membership. So, Jeff, thanks again. Appreciate it.
Great to be here.
All right. Thanks, everybody. Bye.